is a busy time of year for procrastinators. The deadline to file your income taxes next Tuesday. That is just 6 days away. Nancy Coutu is a certified financial planner, co-founder of Money Managers Financial Group, and she joins us now with 5 last-minute tips to save you money and frustration. Good morning. Good to have you with us.
Good morning, Jose. Good. Thank you for having me.
I've been getting some information from you on a wide variety of subjects just this quickly. But this is a time people need to kind of really knuckle down, right?
For sure. This is not the fun time of the season, you know.
So the first thing you say is don't ignore the deadline itself.
You cannot. It is absolutely critical that you file your taxes April 15th. That means April 15th, at least file your tax return, even if you think that you might owe a little more in taxes. The main thing is that you get that tax return in. IRS is not forgiving. But it also means that your taxes that you owe are supposed to be paid on April 15th. So you can file for an extension. An extension to file the return, but that does not mean you get an extension for paying your taxes.
That's what people get confused about, too.
Absolutely.
Like the extension means I don't have to pay yet.
Not at all. The
not.
extension just means you have an extension to file the return with the expectation that all of your taxes are paid by April 15th.
Now, you got to have your documents ready, of course.
Documents are so critical. No documents come in the mail anymore. They come online. So it's your responsibility to go to the institution, maybe your bank or your savings account or your mutual fund company, to get those tax statements for your
W-2s, and
W-2s, 1099s from maybe investments, deductions from mortgage interest payments, IRA deductions, what you did for the year, required minimum distributions.
Gotcha. Have them ready. Now, your number 3 tip, be sure to max out those IRA contributions.
Yes, that's one of the things we can still do by April 15th. So if you didn't fully contribute to your IRA last year, you still have time until April 15th. You can contribute $5,500 if you are under 50 and up to $6,500, 50 and above. And Roth IRA would be the first choice if you qualify.
Okay. And claim the investment losses from previous years.
Yes, and a lot of times people forget that. They might have had a loss in the stock market or a mutual fund or even real estate over the last few years. They claimed it in 1 year and forgot to carry that loss over, and you can continue to carry it over $3,000 a year until the loss is completely written off.
Of course, you got to maximize your deductions as always. And you say it's key to develop a tax strategy.
For sure. And deductions, even more so credits, tax credits that people don't understand. The power of a deduction is if you have a $1,000 deduction and you're in the 25% bracket, you save $250 in taxes. If you get a $1,000 tax credit, you save $1,000 in taxes. There's a radical difference.
Well, we appreciate it. Thank you very much.
My pleasure. Thank you.
We will have all this information and a link to her on our website, abc7chicago.com.